Hello everyone. Let me begin with the year gone by 2014, which was a reasonably good dream run for the fixed income markets. We saw almost 100 basis points rally across the curve. The benchmark 10-year GSEC yield ended the year at about 7.9%, translating into reasonably double-digit returns for investors across duration funds like the Kotak Gilt and the Kotak Bond. These were clearly based on expectations of rate cut, which of course did not culminate in 2014. But basically there were expectations of significant moderation in the consumer price index, which obviously led to these kind of expectations. While the CPI is well subdued below at the 5% mark, it remains to be seen how things will be panning out in the current year. So what are the key things that one must watch out in 2015? I think it's clearly inflation all the way, the consumer price index, where the RBI has a target of 6% by Jan 2016 and a slightly more medium-term target of about 4% for the CPI. While the 4% remains to be seen if it will be achieved, we are of the view that the 6% on Jan 2016 is not really an impossible target to achieve. In that breath, we believe that there could be a case of at least 50 to 75 basis point easing this calendar year for the repo rate, which is currently at 8%. Obviously, the key risk to watch out for this year would be how the US pans out in terms of their interest rates. While the data coming out is reasonably mixed, in fact, the key economic data, including the productivity data in the US, is coming out a little bit somber, which has led to a reasonable rally in the US 10-year yields, which is currently at 1.95%, down from 2.2% just about a week back. So I think it's very, very uncertain globally. The Eurozone is in its own mess. How the US, how the Europe pans out, is there another round of quantitative easing, etc. out there, also remains to be keenly watched. In this kind of a scenario, what are the strategies that one must focus for this year? I think the underlying theme for fixed income still remains focusing on duration strategies like the Kotak Gilt and Kotak Bond, which is an active play on interest rates. With the economy likely to do well, it's our view that the credit upgrades would be a tad more than the credit downgrades, making accrual strategies like Kotak Medium Term also a potent solution for investors in the 24 to 36 month bucket. Whatever the strategy be, we believe that it is apt timing for one to access duration or accrual strategies through funds such as these. I think it will be very prudent that one takes the first mover advantage rather than do a rear view driving, chasing the past returns and only to regret in future. On that note, wish you a very happy and prosperous 2015. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.